All right, brilliant to have you here, Greg, to kick off the series about investors and what you think about, and how your deals work and everything. So, you're one of the founders of Evergreen Mountain Equity Partners, right? And we know each other from one of the boards. Why don't
Yep.
you start by just saying what the thesis of the fund is, what you guys are trying to do?
Yeah. Well, first, thanks for having me on, Stu. This is great, and really appreciate you including me in the series here. So, yeah, Evergreen, relatively new fund, and we started it just about a year and a half ago, I guess now, or so. But really, it's a very thesis-driven fund, focused exclusively on the future of work. So, when we talk about that, that's where my background is. That's where my partner in the fund, his background is, and really try to bring that kind of expertise to that experience within that domain to our portfolio company. So when we talk about future of work, we're talking really broadly about the dynamics that are changing the way that people will have a career, right? And the way they go to work, the way they operate in a work environment, what kind of jobs, will they be going after, and how will we all work on a global level, right? So if you think about things like automation, mobility, globalization of the workforce, freelance and gig work, how, AI and how that's going to impact work. Those are the kind of things that we think about in the fund, that we think about in the within the fund. So that's our thesis. Relatively early stage. We typically are kind of what we would say is sort of seed plus to Series A, typically, where you have to have some revenue, but you don't have to have a ton. And we just need some sort of early indicators of product market fit, and right up to Series A. And we'll lead an investment, we'll follow on. We don't care much about that, but it's got to be within that core area of our thesis.
And I guess Spaceban's the board we're on together. That must have been one of the very first ones that you invested in, right?
Yeah, very much. I'm trying to think. Yeah, it was I think it may have been the second or third investment that we made out of the fund. And Spaceban's is a great example, right? I mean, they're, very much future of work, right? They are, this is a workforce health and safety, built for large manufacturing environments to help keep people safe. In a working manufacturing setting. So very much within that thesis. But yeah, I think it was our second or third.
So you're there in Denver, right? Denver, Colorado. These
Yep.
two guys from the UK rock up and say, we've got this really great idea. How on earth do you analyze that and make a decision? Like, this is the hardest part of your job, right? How do you look at that?
It is, first of all, half of our investments today within the fund are outside the United States. That was never something that we anticipated. We are, a US based fund, never anticipated that, but we don't care where somebody is. But how do we make that kind of determination in that setting? For us, it's all about the founder, right? The founders. Our fundamental belief, my partner has a great saying in this where he calls them find a way founders, right? It's the, it's the founder that basically, or in the case of Spaceban, there's founders they're going to figure out a way to build a successful business regardless of the challenges that they're going to encounter, right? And that's fundamentally what we're underwriting at an early stage is the founder. It's not the business. We know that the business is going to pivot 10 times along the way. We know that whatever business plan or financial plan they put in front of us, the 5% of it is going to be right if we're doing great, right? If
they're watching this now, can they accept that as a norm? You're fine with it being a bit flaky? Is that what you're saying?
Absolutely. You can't not be, right? I mean, I'm an operator. I'm not a finance guy, right? I didn't come at this at the VC world from, with a finance background and the traditional Ivy League degree and all the other stuff that, most people running venture funds have. I was an operator. I've started multiple businesses, have been fortunate along the way to have a couple, successes there. But I can tell you, every single one of those successes came on the back of what we perceived at the time to be failure after failure after failure after failure. And, I was joking with somebody yesterday. We were talking about this before we started recording, and I have my own podcast. And I was talking about this when we were doing a podcast recording yesterday. And, I was joking with my co-host and also the guest, and said, the only thing that sort of got me from the point of starting the business to the point of exit is nobody had actually told me how many times that the business had fundamentally failed just repeatedly, except I wasn't smart enough to figure that out. Nobody actually told me that. So I just kept showing up to work the next day. And this stuff, you don't know how these things are going to evolve, right? But if you've got a great founder, like we have in Ronan and Harry at Spacebands and other founders that are in our portfolio, when you've got a great founder, they're going to figure out a way to make this thing successful. And what we really try to do is just kind of help them along in that journey. So, I mean, that's what we're looking at. I mean, yeah, certainly the idea has to be good. It's got to be within our thesis. It's got to make sense. It's got to be somewhat capital efficient so that don't feel like we're going to run out of money over and over and over again. But that path from the day we invest to the day we were no longer invested in that business, that path is going to take so many twists and turns. We don't pretend to be able to know how that's going to work.
And so you're a GP in the fund and Ira as well, right? So it's just the two of you as GPs?
We actually have two other GPs in the fund. One is our internal legal counsel, who's a GP, and then we've got somebody else who comes out of the private equity world. But Ira and I are the two founding partners. We're the two founding GPs of the fund. And
how do four of you make a decision? Do you all have to agree on something, or do you one of you sponsor the startup into the fund? How does it work?
Yeah, with all four of us, and we've all worked together for a long period of time, so we know each other really well. So this is probably not a very formal thing. But we do have an investment committee. One of us, really, Ira and I are the ones dealing with the companies. And sort of forming our opinion of, if we should proceed, how we should proceed, things like that. And then we'll take it to the investment committee, one or both of us. We'll take it to the investment committee and, and make the argument. Sort of our general rule is Ira and I, this is kind of an informal rule, but Ira and I both need to be on board with the investment before we go ahead and do it. I don't think we've ever made an investment where I've been, really supportive of it and Ira has been against it, or vice versa, where we've actually made that investment. Although, in the hope that Ira is listening to this, there have been I've been out in favor, he's been against it, and I've been proven right. I don't think that's ever actually happened with him.
we just underline that bit in the show notes.
That's right. Yeah, that's just be the pull-out quote from the from the recording. But he, both of us really need to be on board with it. And then we bring it to our investment committee and make, and make the argument. Yeah, we don't have a sort of a necessarily a formal voting process, but if there's anybody on the investment committee that really believes that this is the wrong move to make, we're probably not going to do it.
So any no is a no overall. Is that how it works?
Yeah, pretty much. Like I said, it's not so much a formal process. I don't think that's actually written anywhere, but that's functionally the way it pretty much works. These are all really smart, accomplished people who have a lot of experience. And if somebody, there are things, all kidding aside, there are things that but Ira jokes all the time that I've never met a founder who I haven't fallen in love with. And that's not like literally a romantic thing. That's very much a,
it's an energy thing, right? It's a founders founders type thing.
That's right. And you become infused with their passion for the business. And Ira is the same way, even though he won't admit it. And, and I think it's good to have those individuals on the outside of that decision-making process that can say, guys, I get what you're seeing. I know you love this founder. I know you're really excited about it, but there's parts of this that aren't adding up. because ultimately we have to represent, the interest of our LPs. And we've got to make sure that we're giving them the best possible chance of getting a meaningful return on that investment. So there are things that we, we're humans, and you start to form an opinion and you really fall in love with that opinion, and it takes people outside of that to kind of rein you in sometimes.
Burst your bubble, right? Sometimes it needs
That's
it.
right.
So
That's
you
right.
mentioned the LPs and stuff, where have you brought the capital in from, and how much did these guys trust with you in the first fund?
Yeah, we're lucky. I mean, it's a small fund. It's a $10 million fund. It was our first. Ira and I are not, we don't have a track record as fund managers. We've got strong track records as operators. Because of that, we've been, really lucky to have made a lot of people a lot of money along the way, in our careers in the businesses that we've run. So our LPs are I think I'd have to go, I mean, probably 90% of them, 80 to 90% of them are long-term investors in businesses that Ira and I have run in the past. Starting to
There's a
change
history and a
bit.
trust and an understanding between you.
Yeah, they know us. We've been successful for them before. They trust us. And
They probably know some tells as well, right? If he's blinking, it's
that's right.
probably
Oh
not
yeah,
a
I'm
good
sure
thing.
they've got all kinds of. They know the good and the bad for sure. But they've, yeah. I mean, there's, and that's what investing in this is, right? When you're a first-time fund manager, it has really unique challenges, because the big LPs, the family offices, large family offices, big institutional funds of funds and pension funds and things like that, they're not going to look at you. Typically, they just have rules within their operating model that basically say we won't invest in first-time funds. So you really are out there building this with the people who have invested in you in the past.
Okay, that's very cool. I think my experience of you guys from being on the Spacebands board has just been amazing so far. You really do, for me, personify that operator mentality, that you're there asking hard questions and challenging everybody, but you're also there helping at the same time. And you sound and you kind of feel like in the discussion somebody who's trod through the same mud as well, which is really nice to be part of. I great respect for both of you and the way you've helped the guys in Spacebands.
No, I
Just
really appreciate that.
wondering, what sort of other companies have you invested in? Are you able to name any on today's kind of interview?
Sure. Yeah. I mean, we've got a number in our portfolio. I mean, we've been fortunate. Again, we just made our first investment just over a year ago. So, we're early in our hold period on everything that we've invested in, continue to make investments. But, I think a few of them, Chatterworks is a company, a really interesting one that we invested in that's really changing the way, again, everything we do is around future of work. So really changing the that companies source talent and connect with talent. So it's really focused on selling to the staffing industry primarily, and really helping to connect, using predictive analytics to really connect an individual recruiter with their talent in some, potential talent in some really unique ways, using social media and things like that. So that business has been, is a great performer, continues to really, incredible founder, continues to really, just do unbelievable things and really innovating around the talent sourcing space. We've got a company called CPAL, which is a really interesting one, a little bit later stage, and we would normally invest, but super interesting. Again, focusing on it's a ATS and workforce management system that is based largely out of India, and is probably the fastest growing applicant tracking system, and combined with a vendor management system. So if you look at the way that companies hire, it's not uncommon for a large enterprise company to have thousands of staffing companies that are providing talent to them on a contingent or permanent basis. And what this really does is it helps large enterprise organizations or staffing firms manage those vendor relationships with all of those staffing companies, and then manage the flow of talent coming in from those companies. So really interesting. It's kind of like it's kind of like supply chain management for talent. That business has done continues to do really well. Got a company Mexico City who we're really proud of called Hitch. And they
Hitch,
are
like the movie?
Hitch, just like the movie. Yep.
Okay.
And they are basically a suite of applications for SMBs all over Latin and South America that help small businesses in Latin and South America hire talent more effectively and at a reduced cost. So definitely have a smattering of stuff all over the place. Like I said, it's a very international portfolio, but certainly a ton out there that we're incredibly proud of.
And I know you've just run like your first summer camp, bringing all these people together. What was it like? Was it a car crash when you got all these different personalities in the room, or did they nurture each other? Or these things can work both ways, right?
Not a car crash at all. It was really, honestly, an incredible experience. One of the things that Ira and I set out to do when we started Evergreen Mountain was to honestly be the venture partner to these companies that we always wanted to have, right? And one of the things that I always wanted to have, it was just amazing to me that, over my career, I think I've raised over 400 million or some 350, 400 million in capital and, for the various businesses. And one of the things that I worked with some great firms and really incredible top tier firms. But one of the things that I always wanted to have, and very few of them really offered a way to do this, was a connection with the other portfolio companies, because, with the other founders in their portfolio. Some of them did okay at that. Some of them, honestly, it felt like they were intentionally keeping us apart, which is something I'll never understand. Whether they were or not, or just was giving off that vibe, I don't know, but that's the way it felt. And what Ira and I wanted to do was to provide an outlet for these founders to come together and share their experiences, create their own connections with each other to be the support system for one another. So, the magic of that, there's this magical thing that happens, Stu, and you see this all the time, right? You stick a bunch of founders together in a room, and just crazy stuff starts to happen,
They
right?
start
like
doing stuff, right? They start,
right, they just start doing things,
or
right?
they get super competitive with each other, right? That's the other thing.
That's right. But in this case, they're not. They're really. We're very fortunate to have a group of people that just sort of very quickly connected with each other. And, by the end of this 3 days, it wasn't about anything that Ira and I were teaching them. It was very much about what they were teaching each other. And, it was an incredible experience. I can't wait to do it again next year. But it was super fun. And I'm in the mountains of Colorado here. We've got a large piece of property stuck up in the middle of the mountains here. And the funniest part with this, you really test the mettle of somebody when they show up. We did it at my house, and we rented a bunch of RVs. I don't know if Ronan and Harry told you about this, but we rented a bunch of RVs and just stuck them all over our property. So everybody was like sleeping in RVs on my property. It was we said it was summer camp. It truly was summer camp. I mean, this was not a highbrow experience, I can tell you that.
Well, I love it as well, because if you don't like your spot over here, just move the thing, right?
That's right. That's right. Exactly.
Amazing. So one of the most important questions we're asking these interviews is about when founders approach you, like how you want to be approached and when you want to be approached in that cycle. Because every investor that I've spoken to has a different mindset for this. Some want to be talked to early before the money's even being discussed, right? They want to understand the person and the idea. Some want to know when you've got proof points and don't come and talk to me before that. Where do you guys sit on the spectrum? How do you want to be approached? What kind of company should it be that comes to you? And what kind of founder should it be? What kind of questions should they be asking?
We love, both Ira and I love founders. They're our people, they're our tribe. These are people that understand us and we understand. And we are always willing to spend time even if you're not in our thesis area, we are always willing to spend 30 minutes beating up an idea with you, giving you kind of thoughts. And that's something that, I know both of us are certainly always willing to spend some time. Doesn't mean we're going to invest, but we're certainly willing to provide any guidance, that we can. If you believe you're in our thesis area, again, around future of work, you've got some revenue. When I say some revenue, probably I'd say, our sweet spot is really probably $500,000 to $2 million in ARR. We'll go a little bit lower than that, but you've got to have somebody needs to be buying your product. That's not like your brother or, like your buddy or something, right? Somebody needs to, like, within your target market, somebody needs to be buying your product. And I think if you have that, we have a lot, if you follow my LinkedIn or you follow my Twitter, there at Evergreen MEP, there's a ton of content out there to tell you how to kind of put together a quick overview of your idea and of your reach them, how much capital do you need, and how long is that going to last you? If you can basically tell us those four things, reach out and get in contact and tell me those things in an email.
No, you just froze out on the satellite just before you said those four things. So if you just want to recap for me on those four things, that would be super cool.
Yeah, sure. So what's your product? What's your target market? Who are you selling to? How do you sell to them? How much capital do you need, and how long is that going to last you? Those are really the four things. You can spell it out in an email for us. You can stick it on some fancy slides. I don't care if you've got it, and then also tell us how it fits our thesis. Put it in an email and send it to me or send it to Ira, and we're really easy to reach. It's greg@emep.io. So that stands for Evergreen Mountain Equity Partners .io. It's Greg, Greg, or Ira, IRA. If you misspell his name, you're out. That's the
that's the rule.
You flunked the IQ test. You're out.
So you guys answer your own emails. You're not going to screen these things in terms of, there's not going to be somebody saying, don't read this or whatever. You're just saying openly, I'm happy to talk to people who are founders, right?
Sure. Absolutely.
Amazing. All right. So why don't you close us out, Greg, with the best tip you've got for a founder who's trying to start up right now and maybe not quite ready for you, but soon will be.
The thing, it feels like I have this conversation with every founder I've come in contact with for the past 12 to 18 months. Keep narrowing your market, right? If you
they're trying to do too much for too many people, is that what you're saying?
That's right. Don't try to do too much for too many people. Narrow it down. Get down to the point and tell me as an investor, or know this for yourself. Who is that market that I can go after that will believe, because it's so narrow, that you built their product specifically for them and no one else? That's the market I want to know, right? Because that's the person. The rest of the world, you're going to be in this kind of competitive situation, but that's the individual who says, my God, I didn't even know that this thing existed, and it's exactly what I need. And that's the sell you're going to be able to make all the time. Because if there's one person that will say that, there's more than one person that will say that, right? And that's all it takes. When you're dealing with really early stage startups, just getting to the point where you can get that little critical mass, that first customer, that first 5 customers, right? And have them so deeply embedded in what you're going to and what you're doing for them that they're willing to talk. And that provides those case studies, the customer testimonials, the stories that come out of those first 5 will then leverage you to the next 5, then the 10 after that, then the 10 after that, as your market starts to expand a little bit beyond. So many of the companies we talk to today, they're going out and, I don't know what business school taught this, and I don't know what business, what fundraising pitch deck said you had to do this, but everybody starts talking about, oh, my TAM is $4 billion or $14 billion. I could not give a crap what your TAM is, right? Tell me the first 5 customers that you're going to go sell to and show me how you're going to get to them. That's actually what, that's what's going to build your business. The $14 billion TAM, that's going to help you when you get to 50 million and above in revenue. We need to try to keep you from going out of business, and we need to try to prove product market fit at a really early stage. And that is about as narrow of a market as you can get to.
Amazing. What a great insight. Thank you so much for being on the series today. It's, as I say, it's an absolute pleasure to be on a board with you with Spaceplans. I really appreciate what you do for everybody. And I really appreciate the things that you've shared today. It's going to be super helpful for the founders to watch this. Thanks, Craig.
Thank you, Stu. Really appreciate you having me.